Okay, everybody, welcome to Aberrana Trading or Aberrana Investments and Trading Corporation channel on YouTube. This is my inaugural video. I will post this video and pin this to the beginning of the videos. That way, and I'll entitle it inaugural so people can come back because I probably won't be going through all of this again. My introduction. Um, Hopefully it doesn't bore anybody. I hope you learned some stuff that you didn't know, and I hope I can direct you in the proper, in my opinion, proper ways to go about doing your trading as it pertains to forex trading. If you're new to forex trading, I suggest that you go on to babypips.com. You have to pay to learn there now. About 15 or 20 years ago, you didn't have to pay to learn there. Then you could just print it out, but now it's just everything's pay for play. So you want to learn, you got to pay. Or you could go to Investopedia and do all of your search queries there for things that might come to your mind or things that you may hear me say on any of my videos. I my name is Troy, and it is November 22nd, 2025 at 9:43 p.m. I am recording this video to go over some of my screens, go through my top down analysis, go through the brokerage accounts that I'm familiar with, my experience dealing with offshore, my experience dealing with onshore, and all of these other little different nuances of trading. But the primary focus of this channel in particular is going to be posting uh, um, daily recaps of the forex market. If you leave comments or questions in the comment section, I will answer all of the questions that I can, and I will reply to all of the inquiries that things that you guys may want me to go over, and stuff like that. So, with all of that being said, like I said, my name is Troy. I trade forex. I've been trading forex for probably about 7 years. Um, Ups and downs, things like that. Figuring out my strategy, trying to create my strategy, put my strategy together, back test it using real money. Um, that's the best way to back test to me is to test forward. Losing money, skin in the game, all of that. I've done all of that. So now here I am. I feel like that my strategy is strong and I think it's reliable. And I'll be trading it live on another channel I'll create, and we'll trade live forex markets, which probably start about 3 a.m. when the London market session starts, and we'll go through until about 5 when New York session closes. We won't worry too much about the Asian session. I will do a recap covering the Asian session on the particular pair that I trade or any other pairs that are recommended from you guys that you would like for me to go over. So we'll do it like that. But my currency pair that I primarily trade is the US dollar versus the Japanese yen. I believe it is the most consistent, reliable trend or trending currency pair on the market. Like you get clean moves. You get clean moves on your 5, your 15, your 30. You just get clean moves everywhere. Sometimes one candle could move 200, 300 points. A lot of people use pips, but I use points because pips really doesn't have a definition, to be honest with you. It's just a point. It's a fractional point that moves whole points and then it moves whole decimal points, which would be whole numbers. Um, you trade Forex to earn a profit off the undulations of the prices of two currency pairs, the US dollar versus the Japanese yen, the Great British pound versus the yen, the US dollar versus the pound. A lot of these currency pairs are kind of quasi tethered, so they don't move too often, but when they do move, they will move. But a lot of them, like the Canadian and US dollar, of course, I mean, come on, we're neighbors, so that pair is not really going to provide a lot of profitable moves. The US dollar Japanese yen pair, in my opinion, from studying a lot of different pairs, it just has so much clean moves. And I'm going to show you on these recap videos, and then I'll show you on another channel where we're doing live. I'm not going to sell you guys anything. I'm not going to sell Discord memberships or anything. I'm going to primarily do this on YouTube, and I'll have those channels up on YouTube. Everything will be, I'll be creating different content on different channels. Some of it will be like generalized trading content, it'll be live stream content, it will be video recap content and things like that, just to give you guys a wide range of information. So again, with that being said, um, I'm from Atlanta, Georgia. I might not sound like it because I lost that, that southern drawl a long time ago. I read a lot, I study a lot, and when you educate yourself, you tend to speak speak eloquently, and you tend to be able to um, relay your you tend to be able to relay your messages in a more clear manner. So yeah, I'm from the South. My family's from the North, so I do have a mix of it. Um, but we're looking at to get right into it. And if there's anything else that you guys want to know, like I said, I'm gonna direct you to Investopedia, babypips.com. You can watch YouTube videos. My education of this comes straight out of, I mean, many years of a lot of books, a lot of black and white, reading and studying and digesting things front cover to back cover and doing it multiple times over with each one of these, treatises that I did study. So, you know, excuse my attire, I'm in my garage office, and, I run my small company on all these different screens that I have. And I just decided that I need to get into this YouTube space, and I need to add to the list of raw information channels that are out here. There are good channels out here. Um, and then there are some, there's regular channels out here like people grifting and all these other different things, but when you come over here and you watch your recap videos, and you come over to another channel and you watch your live trading videos during the session, I'm going to follow the masters. There's a lot of masters out there that have been doing this all of my life. I'm 45, and there's a lot of people out there have been doing this since I was, born. So I listen to them, I follow them, and I'll relay this, in my specialized form. So let's get into it. Forex trading is the profiting of the difference, the differences of the values of two different industrialized countries, and you make profit as these undulating price wars go on a daily basis. If price in anything was static, you would not have an opportunity to make money, and the system would primarily, it would pretty much collapse. You have to have these different, even though you might not see or feel the effect of price undulations on a daily basis in your daily life when you're spending your money and when you're going about your daily business, it's happening. And in a nutshell, without being too technical and going too deep into it, that's what trading is. Whether if it's trading stocks, options, bonds, forex, whatever you're trading on a cash I had to take a quick pause for the cause. Whatever you're trading, the system, the economic system of the world, prices on everything is always in flux. It's always ebbing and flowing. You're not feeling it on a daily basis, and prices are not changing on a daily basis. That would be insane, also. Um, but prices will stay the same for a while, and then once it gets into a consolidated range, then you might see prices increase or you will see prices decrease. Gasoline is a perfect example. So if gasoline is undulating in these different zones, these different tops and bottoms, once it consolidates and it starts to, find its range, its price range, it'll change. It'll change adversely or it'll change, for the better. Um, that's with anything. So that's what Forex is. Forex trading is in a nutshell. You are trading the price undulations and you're earning your profit off of it. It's highly skilled. It's data driven. So the whole gambling comparison, it's not, you're not counting cards, you're not sitting and just spinning, throwing dice and spinning roulette wheels. Roulette wheels, you're not doing that. That's gambling. This is high information. This is global information. So I would really appreciate it if people would stop dumbing down uh, global econ into just gambling. Like that's it's insane to me. But I use to collect my data. I don't overload myself with data. I do watch Bloomberg and I keep Bloomberg on all day. I might keep Schwab Network on as background noise and, visualizing economic data that comes out. If you look at the screen now and see I'm on the tradingeconomics.com calendar website, if you're not using this calendar, um, to trade or to gather your information, you're definitely not going to know what's going on. You're trading blindly, and things that are happening in the market, you're attributing them to, things that are fictitious. These this calendar, just it shows you everything that's coming out, all high level data economic information. Red days, like here, if you look here at the US, for November, Tuesday, November 25th, 2025, we have PPI month over month, retail sales month over month, core PPI, retail sales control group month over month, retail sales ex autos, MOM, core PPI year over year, PPI ex food. You have all of these different data sets coming out. Redbook year over year. Um, This is for every country, every industrialized country in the world. So you see all of these different flags here, South Africa, the Eurozone, Brazil, Korea. You see it all. You see France, you see Zaire, I believe that is ZA. I believe that's Zaire. I'm not sure. We can click on something. I don't know why it's not clicking. It's not clickable, right? I don't know what that is. That's Española, that's Spain. So yeah, you can click on any one of these data sets and you can get pretty much the information that you need. And as you're watching your charts, red day information, this is what moves the charts. This is the shit that moves the charts. This is the stuff that, when you see big candles and you see, different volatility happening during the trading day, this is where it starts. This is where the information comes from. And people are watching this stuff like this is it. So tradingeconomics.com, I recommend it. If you're going to be following this page and you're going to be watching the recap videos daily, um, this is where I'm going to be clicking to. This is what I'm going to be showing first. This is where I come to. This is my reference point. This is the foundation. I want to see what's going on, what's coming out, what information is coming out globally because it could affect my market, and I trade UJ, so anything could affect my market. And then I have another tab up here. It's the U.S. Bureau of Labor Statistics. Um, and before I move forward, anything that I may have missed, In my introduction, forgive me, I'm moving fast. This is my inaugural video. I'm going to jump into this YouTube space 2 feet first, and I'm going to just put my brand of information and put my brand of thing out there. This is, a crude introduction, but my goal is to get it crisp, sharp, clear, and on par with like Bloomberg and Schwab Network and things like that. I want people to come here and get a different brand, a different flavor, a different style of economic data, trading information, investment information. I'm not a registered security advisor, so I won't be advising anyone of anything. And I will be posting a disclaimer that this is all educational purposes only. It's just information. It's just me getting my information out there and me getting my strategy and my systems out there and what I think and where do I think that things are going. So okay, so I also use the U.S. Bureau of Labor Statistics website too, and they'll, if you're looking at the screen, it'll give you um, detailed information on, things that are coming out. This is your release. This is your release column. Employment situation, real earnings, producer price index, state jobs, U.S. import and export price indexes, job openings. Gosh, I don't know, man. I'm getting these little gnats and stuff in this garage. Employment situation, CPI, real earnings, see, and then your next column will be your reference period, the period that they're referencing the data set for. And then you have the previously scheduled release date. This will be your, change. This will be your change column, your revised release date. So, just looking at your columns on your BLS website, seeing what things are happening, and you know, there was something major coming out that was supposed to come out. It was the CPI. October CPI was canceled. Okay, so on Thursday, December 18th, we're going to get November CPI. See, October was when the government was shut down. So we're going to get those numbers. We got pop-ups coming up over here. Get that off the screen. We got government numbers. And like I said, look, we're going to keep these recordings raw. I'm not going to be doing too much editing until I, figure out that there's a need for it. But people like their information real, and that's what we're going to do. We're going to keep this thing real, and we're going to keep this thing raw. Um, so at the bottom, they're going to just give you a brief explanation of what the CPI, employment situation, all of these different things, they're going to just briefly explain it to you. So those are the two tabs that I keep up. Let's go to my trading view tab. Let's see. Where's my trading view tab? Here. Okay, so this is my trading view tab. And this is my watch list. I want to go over this real fast so you guys can know um, what I'm watching. Any questions, any comments, leave them down below and I'll get to it. And this video will be pinned forever at the top. And that way people can know where I started at and how I have progressed and, things of that nature. So getting into what I watch and what my watch list is on TradingView, I keep this pretty simple also. See, I keep my data set pretty simple of where I look to get my information, BLS, Bureau of Labor Statistics.gov, my tradingeconomics.com. I keep it simple. This is the high level information. I don't, I could go to CFTC and I could go to National Futures Association, all of these different websites, CBOE, NYSE, NASDAQ. You could go anywhere. You can go anywhere and get your data. I get my data from these places right here. And I utilize TradingView's free account just for my watch list pretty much because I don't actively trade. I haven't linked my brokerage account to this thing. And before I get into my TradingView watch list, let me go over the forex brokerages and what my opinion is on trading offshore. Okay, and I'm just giving my opinion about that because I've heard that I've been told in you know, people don't trust forex because forex has been, you know, grifted as a scam and people have lost money, and it just was a bad time. There was a bad time. There were some bad years for forex, and forex is the most liquid market in the world. It's liquid. You could put all the McDonald's in the forex market. The forex market trades $7.6 trillion per day in liquidity. The United States stock market trades $515.5 billion daily in liquidity. The pie is tremendously bigger in the forex market. The spot market, you know, these brokerages offer us CFDs. You could trade forex futures. You could trade options on futures in forex. It's just it's the pie is never ending. You can't go get enough jobs to create 7.6 trillion in liquidity. You can't own that many businesses. I mean, you potentially could, but like what the hell? 7.6 trillion dollars in liquidity a day? Like what kind of businesses do you own? Elon Musk is about to make $10 trillion over the $1 trillion over the next 10 years. You know, so I choose Forex. It was taught to me. Maybe one day I'll get into my complete background of how I got into Forex, but not today. Today is about a quick overview of who I am, what I do, and what we're here to do. Um, so, you got three regulated, trusted brokers in the United States that you can trade, and your money will be safe, pretty much. Okay, you have Oanda, you have Forex.com, and you have TastyFX. I use TastyFX. Okay, I've had a Forex.com account, but for some reason they will not approve me to get another account right now. I don't know why. Maybe I need to just open up a corporate account with them. I don't know. But like I said, I do have my own corporation. It's private. It's me. I trade my own money. I lose my own money. I don't trade prop firms. I don't like the rules. The rules are just, it's just like a million rules for prop firms. I just, you know, it's for everybody. It's not for me. It's just not for me. Okay. But I fully understand it, and I know how to trade futures. But the prop world is not for me. So I play by my own rules. Um, and I'm not afraid, you know. So it is what it is. Um, so you have Oenda, you have TastyFX, and you have Forex.com. My opinion about the three brokerages. Um, Oanda shaves a lot of the price action. You're not going to get a full candle. This is my observation. This is my experience. Oanda does not give you full price action. They're not showing you full price action. Full price action, of course, is happening in the back channels and wherever the information is coming from, whatever servers are feeding you the information, but they're tight. Oanda is very tight. TastyFX is way more looser, and you're getting pretty much full range price action on your charts. You're really seeing the real total value of these currency pairs that are, you know, trading against each other or whatever it is you're trading. However large your account is, you know, you can, if your account is in the multi millions, you can, of course, have access to oil and, you know, precious metals markets and, you know, minerals markets and things like that. Um, so that's Tasty FX. They trade way looser, and you get way better price range action on your charts. And you have Forex.com. To me, Forex.com is the best. Forex.com is the best regulated broker in the United States. Now let's talk about leverage real fast. In the U.S., you used to have 100 or 200 to 1 leverage until the Obama administration came in. They changed all of that. They dropped it down to 50 to 1 leverage or up to 50 to 1 leverage, depending on what currency pair you're trading and, you know, different brokers and different strokes for different folks. Okay. So right now with TastyFX, just laying it all out there, I primarily trade US dollar JPY and I'm getting 18 to 1 leverage. Okay. It's volatile, but the moves, to me, account for what you're losing in the utilization of your money. The volatility of it, makes more better. You can get more sustained moves, whether up or down. Okay, so that's the brokerage I use, and that's the leverage that I'm getting. So the pretty much in the United States, you're getting 50 to 1 leverage max. Research your brokers. Okay, and choose the one that best suits you or best fits you and your trading profile, your trading style, your trading strategy, and your account size. Whoever offers you the most perquisites. Um, Let me see what I wanted to cover then. The offshore game. Oh man, listen, the offshore game is a deadly game, man. I wish you guys luck. I don't know everybody's trading situation. I don't know everybody's trading experience, your level thereof, or the lack thereof. I don't use um, I don't use offshore accounts anymore. I did for a long time, for many years I did, and I lost a lot of money. It just was like a few wins and a lot of losses. Even no matter what strategy I came up with, no matter what I did, these offshore brokers are not trusted. You can't trust them. They're non-regulated. They will shut down. They'll steal your money. You don't know what kind of reserve capital that they have. You can actually look up the reserve capital and find out any tidbit of information that you want to find out about the broker that you use, US base. And that's just what I trust. I trust the United States base, like brokers. And I've gone through it. I've lost money with offshores. They trade against you. Um, but they do instantly open they instantly open you up to all of the different instruments in the forex market. Precious metals, oil, gold, whatever you want, they're going to show it to you. They're going to give you the price quotations. You'll be able to trade it, but you better not be good, because if you're good, you're going to get attacked. And these brokers they're run by some pretty scrupulous people, and I don't trust it, and I don't recommend it, and I'd rather pay the cost to be the boss, and I'll leave it at that. Okay, because I don't want to steer anybody wrong away from what they're trying to do to come up. Okay, now let's get into my watch list. Okay, my watch list on my trading view looks just like this. I queried the top 15 um, cryptocurrencies by market cap and utilization. And this is what I got. I got BTC, which is Bitcoin. BTC has the market cap, but it doesn't have any utilization. Okay, Doge, Dash, VET, ICP, DOT, Link, XRP, Ethereum, Solana, ADA, AVAX, TRX, TON, Pepe, XLM, and Shiba Coin. Okay, I don't invest and I don't trade in the cryptos right now. I'm watching with an eagle eye, because one day soon, very soon, these cryptos will be our fiat. Fiat is cash. Fiat is, paper bills, and, the whole entire banking system has swallowed up and, has regulated fiat. Once they figure out how to regulate the crypto markets and the top coins, in my opinion, based off of your utilization, I think Bitcoin is going to be like our quasi $100 bill, and or the $1,000 bill. If you're a '90s baby, I was born in 1980. We had $1,000 bills back in the '80s and '90s. You know what I'm saying? I seen plenty of $1,000 bills when I was a little kid, when I was a young boy, when I was a teenager. I saw people walking around with $1,000 bills. So I think that Bitcoin is going to be the equivalent to the fiat $1,000 bill, and then the rest of them, it'll be just a breakdown of digital fiat. And I believe that that's what's coming. But right now, I don't put my money into it. Look at Bitcoin right now as of 10, 12, 11, 22, 2025. It's kerplunked, or like the great Stephen Kalajian would say, it has kabooshed. all the way down from 126 in October to 85, 950, 92 as of this very second. That is a very big kabushing. That is not a game. So, without there being any fundamentals, people do trade it. I don't. People do trade the futures contracts. They are creating entities and instruments for you to trade and, make your money off of Bitcoin. I'm not talking about anybody. That's your lane. That's your lane. I'm waiting until it's bankable and until it's regulated, until it's investable. I need it to have some solid feet or some solid ground under its feet for me to trade. But I watch it. I don't change it. I watch it and I stay abreast of the news. I dig into the data of it and I steady learn about the blockchain. I steady learn about the things that make this stuff move and what utilization um, these things have in the different markets. Okay. And that's what it is. At the bottom, I only follow a few things. Of course, like I said, I trade USD JPY on a daily basis. Um, I have my VIX I watch, my VIX charts. I have my Dixie, my dollar index, my US 10 year, and my US 30 year. The US 10 year moves markets, the US 10 year moves money. Okay, the 10 year moves all dollar pairs, whether it be, to the long side or to the short side. The 10-year yield is going to move your market if you're trading any dollar pairs. So I watch that closely. I watch the Dixie closely also. It's at 100, 196. And that's versus a basket of, global currencies. So that's it for that in a nutshell. That's about all I do on TradingView. I haven't linked my brokerage account. I don't take trades on here. I just watch um, the different, instruments. I primarily really just keep a close eagle eye and a watchful eye on the Bitcoins and, all of these different cryptocurrencies because once that really opens up, fiat is dead. All right. So we're already in a digital age. So just be aware that, carrying cash and doing things like that, the value of the fiat is going to just pretty much go away. Um, Maybe not in our lifetime, but it will. So if you're planning on leaving something to progeny, or however you enunciate the word, your children's and your children's children, um, they'll be dealing with pure digital currency. There will be no fiat for them. Okay, so that's what I do on that. Let's get to it. Let's get to the forex charts. I'm gonna pull up my forex and go directly to what I do. So, like I said, those are my data. That's how I ingest and digest my data. BLS.gov, um, tradingeconomics.com/calendar, and TradingView. Because let me go back to TradingView real fast. TradingView does have this neat little thing. Um, let's go to a full chart on Bitcoin. Let's go to a full chart and let's pull it up and I'll show you something real quick if you don't already know it. Uh, this thing is it's really taking its time tonight. I'm utilizing a lot of CPU, you know. I am linked. I'm linked. My account is linked, but I don't trade with it. I don't trade with it. I just kind of like, I get the actual numbers from, I watch the actual numbers from Tasty FX. Since that's my brokerage, I want to know exactly what uh, what data they put out. That way, it coincides and correlates with what I'm doing. Let's see. Let's get this stuff off the screen. Okay. So you got Bitcoin here, right? You can actually, I don't know what it's doing, but I guess I gotta lift it up. You can lift it up and kind of like do this here, and this is where you will get your information on TradingView. If you scroll down on that panel or that panel on the side of the chart, and that's the only thing. If you don't have a paid account, they're just gonna keep popping up these ads on you. So you can go down and scroll down on anything that you have on your watch list, and it'll bring up all of these different things that you can go through, all of these different data sets, seasonals. It goes deep. TradingView goes deep. I mean, I can't take anything away from it. You know, you can go deep into the things that you want to go deep into. So I don't take anything away. You got technicals down here. You can go really deep. You know, you can pull up your 5 minute, 15, 30, hour, 2, 4, daily, and these are just technicals. And you can scroll down on your technical section, and you can pretty much get all of your oscillators and moving averages and what it's kind of like. It's all mathematically driven. It's all mathematically driven. It's numbers. This is why I love economics and trading and investing. It's just numbers. I don't want to deal with a bunch of words and shit. Just give me the numbers, man. At the bottom, you have your pivot points, your classic Fibonacci, Camarilla, your Woody, your DM, whatever DM is. Your pivot, you have your R3, your R2, R1 pivot, S1, S2, S3, which is resistance and support areas, right, for Bitcoin. So you have your, in Bitcoin, since we're on Bitcoin, you would have a Fibonacci resistance right now of 136.8590, a R2 resistance level 2, which is basically standard deviation. This is like the standard deviation of the price. So we're well below, like we're well below. Like it's at 85,000 right now. Look at where your support is at. It's trading well below support right now. 89,892.76 as of right now at 1019 on November 22nd, 25. You're trading 4,000 points below your S3 support. So from your pivot point, you're already 3 standard deviations outside plus some. So you're probably at what, 4 standard deviations from your Fibonacci pivot. And if you don't know what Fibonacci is, Google it, learn about Fibonacci, learn about how Fibonacci shows up in, the real world every day. And that's how you can get that information too, to see, what the hell you're really doing. But yeah, so, all right. So that's what I do on TradingView. I pretty much pull data from there too. It's more granular, it's showing me exactly what's going on in these different entities. So I like to go deep into TradingView and get all of that. It gives me enough for a free account. Okay, so let's go to my FX. This is my MetaTrader 5 setup right here. I'm not gonna go too deep into my actual trading strategy. I will let you know that these are all exponential moving averages. All right. But I'm going to try to, this is my IP. Okay. I haven't seen this strategy posted or spoken about anywhere. I don't know if anybody around the world uses it, but I created this and it works for me. I understand it. And once I legally protect my IP, then I'll dive deeper into exactly what all of this does and what it all means. But primarily we're just going to go over charts. We're just going to analyze price action, and I'm just giving you exactly what I think price action is doing. As you can see here, if you look at this left side of the screen, I do have a sell in for a nickel, which is basically 50 cents per point. It was just something that I saw Friday, and I just think I'm just going to stay in it. I'm just going to see where it goes. And we're going to analyze all this stuff on a daily basis. We're going to go over everything that's going on. If you guys have questions about how I set my chart up, um, I'll answer you, and maybe I can do a small video or a short video about how I set up my MetaTrader 5, and it works the same on MetaTrader 4. You can do the same setup. Any and all questions and inquiries, man. Anything you guys want to know, anything that I can explain to you further, just let me know. I'll go over it. I'm not hiding anything, except for my IP. Anything that is related directly to my intellectual property and my ideas and my strategy and stuff like that, I'm gonna have to get legal first and get protected because this stuff is going out on the World Wide Web, on Al Gore's network. Um, okay, so this is my MetaTrader 5 live. Live, if you can see it up top here, it's a live account. It's not a simulator account. Um, it's a live account. Okay, so yeah. I don't really trade demo. I really never have traded demo because once you start battling with these brokerages with real money, all those demo strategies pretty much go out the window. You got to get in here, you got to put skin in the game, and you learn faster by losing and you learn faster by winning. So, wins and losses, you know, wins and losses, man. So that's what I do. I jump straight in. Ever since I started trading, I have always jumped straight in, you know, and I've learned a lot. I've learned a lot. I've already tested my nerves and I've already tested my fortifications, my fortitude, my will, my emotions. I've tested it. I've gone through a lot of emotions. I've had damn near aneurysms. I felt like my brain was, going through an aneurysm, with some of the stuff that I've experienced with trading. But this is my setup. So let me go through my setup. I have my 5 minute, 15 minute, 30 minute, my hour, my 4 hour, and my daily. I pretty much take my trades off my 5 minute and my 15 minutes. Okay. If I'm really gonna swing trade and stay in a trade some days, I'll trade using my 15 minutes. But I pretty much always use my 5 minute chart as my entry. This will be my entry. This will be my this will be my swing, and this will be like my daily in and out. Sometimes you could just stay in it too all day, on your 5 minute, but your 5 minute is going to fluctuate more. Um, your 15 minute is your confirmation. The 30 I use for confirmation, the hour I use for confirmation, and the 4 hour and the daily I pretty much analyze for my long-term structure. Where is this thing going? You understand? What is it going to be doing? What is the history of it? Things like that. That's what I use my daily for. I don't trade, to stay in trades, for years and stuff like that. So that's what you'd be doing with your daily time frame trading off of that. It's just the analytical time frame. So is the 4 and the 1 hour for the most part is also. It's just a long-term analytical time frame. You want to trade off your 5, your 15, your 30. You just want to do it because you want to get in, you want to get out. And your 15 and your 30 confirms what your 5 is doing. Your 5 is doing what it's doing and it's showing you. So you break it down in your brain. How many candles is your 5? How many candles is your 15? You know what I'm saying? And on a daily time frame. So everything, the daily, all of these before it, these 5 charts are basically the breakdown of a daily candle. Okay. So my bad. Let's put the crosshair back over there. Crosshairs. I like to use the crosshairs a little bit. Um. So going into the weekend, um, we had a little bit of data come out. It made the market swing a little. If we enlarge in our 15 minute, we can see that candle right there. Matter of fact, it's this candle right here. This candle right here is where some information came out at. Some economic data for the U.S. came out. I don't think I can go back on the calendar. I can, but I don't want to take up you guys' time. We're already about 45 minutes into the video. Um, and the recap videos are not going to be too long. They're going to be short and sweet. I'm going to try to make sure that they're less than 30 minutes, raw, uncut. Let's get to it. Let's see what we see. What's the prediction for the next day of trading and, thus forth and so on. So, the way that I have created my strategy, the way I set my strategy up, it's all dynamic. You understand? I like to see dynamic lines. I don't use trend lines. I don't use Fibonacci retracement lines. I don't like straight lines on a chart. It just, to me, straight lines, unless they're period separators, which these vertical dotted lines are, they're just period separators. Just the beginning of my day, the end of the day. And with Tasty FX, the last candle of the day doesn't go, well, the last candle of Friday doesn't go all the way up to the line. It saves that room because in Forex opens up on Sunday at 5 p.m. New York time, Eastern Standard Time. And so there'll be another period separator line that shows up right after this red candle. And there'll be a candle that starts off the new trading week there. And then it'll keep going on. And then the next days, like right here, you see these days will go from day to day. And the candles will go all the way up to the next day. Okay. So those are just period separators. But I don't like straight lines on this chart because to me, it's not an accurate representation of what price action is doing. And I just want price action, I want it to be visualized in the most dynamic way. I don't like static anything. I don't like static thought processing. I don't like static anything. Okay. I like dynamics. You know, when I train and when I exercise, I do plyos and, stuff like that. Dynamic training. The only ISOs I do like are planks, and that's it. But yeah. So going into Friday, we're looking here at our 5 minute chart. Let me shrink it down a little bit. You can see that, you know, look at this. I'm going to get into what all of these lines mean. But like I said, this is the inauguration video. Just giving you guys a very in-depth overview of who I am and what I am and what we're doing here. Um, you can see that on your 5 minute chart, as these days go, you can see this double line here. That was last week. That was Sunday. See, that's what I was telling you guys a minute ago. This Sunday, these two period separators, this is Sunday trading right here in between here. Then you got Monday, Tuesday, Wednesday, Thursday, Friday. Okay, that's all those vertical lines is period separators. Once I shrink the chart down, I can see from a bird's eye view what the 5 minute has been doing. Or I can go out, I can leave that like that. Well, that was the 15 minute. I can go to the 5 and I can shrink that down and I can see from a bird's eye view what the 5 minute was doing. Okay, I can go to another one and I can go to my 30 and I can see from a bird's eye view, if I shrink it down, what the 30 minute has been doing. All of this back here is trades. These were all trades. I haven't taken any trades in a little while since the early part of November. I had some issues that I had to clear up. And you can see those pop-up boxes. If you're catching those pop-up boxes, you can see what the moving average number is. You can see what moving average, mathematical number I'm using, you know. But like I said, I'll get into it once I protect my IP um, from pirates because the internet is full of pirates nowadays. Okay, let me minimize that. Let's go to the 1 hour and let's see what the 1 hour has been doing in UJ. Okay. So we just shrinking it down, just giving you a nice, just giving you a nice view of what I look at on a daily basis. This makes it clearer for me to understand the price action. That is why I utilize the the numbers that I utilize, the um, the moving averages that I utilize. It makes it clearer for me. I like clarity, you know. Let's see here. So let's do some let's do some predictive analytics. Let me show you how I do my top-down analysis for UJ. And you can do this with any instrument you trade, whether it be stocks, bonds, warrants, options, currencies, no matter what it is. You do top-down analysis. You go to your highest time frame that you want to analyze. You go to your daily. Each one of these candles represents a day of trading, one full day of trading, one 24-hour day of trading. Friday, we traded a down day. It was a down day. You understand? Um, I missed a lot of that trading day, and I kind of watched it and I kind of sat on my hands because of the economic data that came out. But once the data came out and the market kind of calmed down, I waited for that to happen, and then I kind of took a trade. And I'll tell you how I trade and why I based off my, why I did my trade based off of what I saw. Um, so if we're looking at our daily chart, we're looking in our most recent time period. You can see from October the 5th that the dollar has been in a torrential uptrend. It's been smoking up against the US, I mean against the yen, okay? And this is not good for the Japanese economy. They don't want to see stuff like this. And they said they're going to put in some measures like maybe a rate hike, because they keep their rates pretty much at zero or close to. I think they're at half a percentage point now for their rates. They're looking at a rate hike to kind of draw more, investment dollars into their currency and into their economy and stuff like that. So they're saying they're going to do it at 160 if the dollar appreciates to 160 against the yen. So we'll see. But right now, as you can tell, um, yeah, since October the 5th, you've had a monumental upswing. Um, let's go down. Let's shrink it a little bit. So we can tell here, April 22, right? April 22nd, 2025, on that day for this year, that was the lowest day of the year, April 22nd or April 21st, April 22nd, 2025. From that day, it has gone up. Okay, so look at your higher highs, look at your higher closing highs, look at your diagonal movement up. It went into this consolidated area here for quite a few days, a lot of weeks. It went into a consolidated area and then kaboom, October, it took off and broke out. And I'm gonna just address something that I see a lot of traders do. Okay, and I think that this is like you guys wait too long. To me, you guys wait too long. You guys miss a lot of the move. You know, the great John Bogle said the first 20% is for the big boys, the next 60% is for the retail, and the last 20% is for the big boys. So 60% of a move is pretty much what you should be targeting as a trader, as a day trader, as a swing trader, as a position trader. You should be targeting 60% of a move, not, waiting for this thing to, get back into this zone and all this other stuff that these traders do. It's taking too long. And you guys are doing this on small time frames, 5 minute, 1 minute, 2 minute, 3 minute, all these different time frames. You guys are doing all this long, waiting around. Like there are things that are happening in the price action that will help expedite your trading and your entries. Trading is all about the entry. It's all about the entry. Okay, and I'm gonna just give you a quick example. Like for me, like I enter on stuff like this. You see this candle right here? Let me take this crosshair off. You see this candle right here? This candle right here. This candle on October the 7th, 2025, opened at 150.308. 152.037 was the high, 150.248 was the low. Your close was 151.818. Okay? This candle right here closed higher. If you're always looking left, if nobody ever taught you this, I'm going to teach you this right now. Always look left. Whatever, you don't have to scroll left. You just look left. When things like this happen, this is what I call a structural change candle. This candle changed the structure of the price action and the direction of where it was going. If you look at the moving averages, what happened when this candle closed? And another thing that nobody ever taught you, the most important aspect of a candle is the close. Don't trade while candles, if you didn't get in the trade before the candle started, like at the close of the previous candle, then you don't get in the trade because you think that the candle is going to do something. You get in the trade after the candle closes because a lot of times candles will form a long wick because of people who are uneducated taking positions while the candle is going. This, in my opinion, is what causes a lot of wicks and tails because you have people that are uneducated and that are just like hot dogging and jumping the gun, and they're putting orders in, and it's like the big boys know where they're going with this price action. You don't know where they're going with the price action, but you got $1,500 in your account, or you got $2,000 or $10,000 or $50,000 in your account, and you're trading still against trillionaire accounts, $1 trillion accounts. There's the banks are trading the money. So you're really like a newborn minnow attaching yourself to a very, very large fish. And what you're doing in Forex trading, you are trying to ride the side of this fish in this ocean to earn money until you yourself eat enough to become a whale or a megalodon. Until you become a megalodon yourself, you ride on the side of the fish and you eat what the fish eats. So when things like this happen, this is a nice candle to get in this uptrend on a daily, right? On a daily time frame. Once this candle closes, you take your entry at the close. And then what happens is you always going to have a pullback. I mean, when price starts to make a move, you can you could get in on the candle that closes outside of all the previous candles before it. Look, in your screen view, in the view of your screen, you literally can see that this one candle closed above all of the candles before it. And this is a daily time frame. So this is October 7th. In your screen view, you can see it's all the way back to April the 18th if you look at the bottom. So that day closed above all the days before it. That at the close of that day, that's when you get in the trade. If you're trading long term, if you're, swing trading, or if you're position trading, you get in on that day. You get in on that day. And if you're watching your lower time frames, if you're watching your 15, let's go. Let's take off the auto scroll and let's take the crosshair off. Let's go back to October 7th. I'm just showing you an example, real world example. Let's go back to October the 7th. What is October the 6th? Let's go back. Let's go back. Let's go back. Okay, bear with me. We're scrolling back. I'm just giving you an example. I just want to show you something. If you're looking at your October, what happened on that day? I think it was October the 7th. Look at what happens. Look what October the 7th. Look what it looks like. Just look what it looks like. Look at that Sunday when the market opened again, and it opened up and it gapped up. It gapped open. Like, you're not going to be in a trade, but if you have the right indicators and you're seeing this happen, you're getting in that trade because you're like, whoa, look at what's going on with my trend. Okay. So October the 6th, and it pretty much really didn't let you in. If you look at your 15-minute time frame, I love the 15-minute time frame. If you're looking at your 15-minute time frame, you know that the up candles are forming. Look, what does that candle show you? A small body, but it's an up day. 15-minute period to period. Period open, period close. One day, October the 6th. That's how you look at a 15-minute time frame. That's why I add period separators, because as the candle is forming, I don't have to look at the daily candle. because I know what it's doing. I can see what candle is forming. I can see the price action. I like to look at the price action from a granular view. I want to see it. I want to see it going. Okay. So you're watching it and you're like, damn, I want to get in. So you're looking and you're actually saying October the 7th. Look, to me, if I'm watching my 15-minute, you really, you're seeing it go up. But if you're taking your trades based off your 15-minute time frame, to me, there's no entry. To me, because I'm gonna wait on a pullback to get an entry. There was an entry this day on October the 6th after this small pullback and this squeeze, but it really wasn't an entry because I would have been waiting for a candle to close above this, you know, a singular candle to close above this area right here. So, but look, it just kept going and it just kept going day after day after day. Now, once you get to October the 9th, then you have some serious pullback action going on, right? It's exhausted now. It's moved up a few hundred points. It's exhausted. So you could, if you wanted to, wait till the close of a candle and get in, right? Or you could just sit back and watch and say, dang, I missed that move. I missed the beginning of that move. Because you always have to look at your daily chart. You have to see what's going on. If you're referencing your lower time frames to your larger time frame, your daily, if you're referencing your 15, I would start at the 15 for reference. And then you could look at your 30 and your 5, but your 15 is going to really show you the information you need to see in reference to your larger time frame, which is your daily time frame. Okay? So, that's what you're doing. You're looking at your daily time frame and you're referencing it and it's relative to your smaller time frame because this is the actual candle formulating. Okay? So that's what happened on that day. So if you have all of your time frame, it's called multi-time frame analysis. That's what it's called. Okay? Multi-time frame analysis. This is how you break your candles down. This is how you understand exactly what's going on in a full day of trading. You can't trade without it. You can look at your 15-minute time frame and you're gonna zone yourself in on it and you're gonna miss a lot of stuff that's going on the higher time frames. The higher time frames also offer a lot of they also offer a lot of your time frames, your lower time frames, I mean your higher time frames, they offer you a wide view. You're like you're soaring high. You're looking at it from way up on high and you're seeing what's going to happen. Like, okay, I'm following it. See, like with all these trades I took, I was just taking trades on the general direction of the trend, So I know, okay, well, today is starting. I'm trading up against uh, a red candle from yesterday, and I can see that it's checked down to this moving average. And the moving averages, I love the moving averages. I only use exponential moving averages. I don't use SMAs. I don't use simple moving averages. Um, and the quick explanation to the SMAs and the EMAs or linear weighted averages, which I don't even freaking understand what a linear weighted moving average is. Um, that's way too mathematical for me. But the exponential moving averages and the simple moving averages spread price action relevance all throughout the entire length of the price action, right? Exponential moving averages mathematically um, give more importance to your most recent time, your most recent candle, or your recent price action in its mathematical calculation. Okay, so the mathematical calculation gives more importance to your recent time period, your recent price action with EMAs. To me, the SMAs are too smooth. I need. You're not going to get a forward moving. There are no predictive. indicators. They're all lagging. So the best way to get information from lagging indicators is to use exponential mathematical formulation to give you a better um, outlook on where your price action is going. Okay. Um, so in a nutshell, that's what I do. This is what we'll be going over. Um, I will cover any and all currency pairs. We'll pull up charts. We'll go over it. And you guys can share your strategies with me. I won't trade your strategies, but I will definitely, you know, look at your strategies or listen to you about your strategies. Hopefully, I can have my live stream to where it will be like we'll have like a live call-in session, like maybe for a couple of hours during the lull periods of the trading day, like when trading times overlap. But I know there's a lot of forex traders out there, and I know that a lot of forex traders are like really like no, they know that this is where all the money is at, and they know that this is where you can really make or break yourself. And you know, stop over trading, stop putting too much money in your trades for real. Just stop doing it. I've done it 10,000 times. I'm hot dog and I'm thinking that yeah, this is gonna be a good. It never works because the more money you put in a trade, with the price fluctuations in forex and whatever you're trading, whatever instrument, stocks, bonds, warrants, options, whatever it is you're trading, price fluctuations will knock you out if you're adding too much money to your position. All right, you'll be dealing with margin calls, or you'll be dealing with just getting your account blown for no reason. And that's the one thing that we got to stop doing as retail traders. Because it's us versus them. It's us versus them. And the big boys they're humongous. So we have to ride on the side of them, and we have to make the money that we can make. So this is what we'll be doing. This is what we'll be going over. Like I said, I will upload the video. Um, right after market close, I'll do the video and then I'll upload it. That way you guys can have a video, going into the open or going into the Asian session and the European session before the next day's US session. And then you'll get a video every single day. Um, I will cover the economics of the global game, but I won't cover stocks. We'll look on TradingView and we'll look at this. I'll add some more symbols. I'll add the triple Qs, the SPY, the DIA, and I'll add the IWM. Those are the ETFs of the indexes. And I'll add those to the TradingView watch list and we can go over those. I can't pull those charts up on MT5, and I might add gold and I might add WTI and Brent. So I will add those to the TradingView watch list because I want to give you guys the food that you need to get full. Okay. So with all of that being said, again, if you have sat through this hour and 8 minutes of video introduction into the world of Aberana Investments and Trading Corporation, we are going to build this platform and we'll make this as big as Bloomberg one day. Okay. So thank you for viewing. Thank you for watching and liking and subscribing to the channel. Um, yeah, and this is what we'll pretty much be doing on a daily basis. You'll have a daily recap of market. You'll see the structure. You'll see where I think is going. You'll hear my predictions and you'll see my trades. Like they're going to be plastered onto my trading account. So if I do take a trade, you'll see where I got in at. You'll see, where I plan on getting out at. I'll break all of that down and you know, like I'll just go ahead and do this one that I put in. I put this one in Friday. So what I'll do is we'll go time frame to time frame and then we'll end the video. And I appreciate you for sitting through this. Um, and this is going to be the rawest, realest trading YouTube channel. This is it. This is where you're going to have, this is where you're going to come. Now, there are some really good guys out there, some really raw, real, stock trading, but there is nothing on YouTube that I like about Forex trading. It's just nothing. This is just grift heaven over here at Forex. Let's start at the 5. Okay, let's shrink it down. Okay, we're going to go to our open. This is our opening vertical line here. Okay, this is our open. So what happened is, as I'm watching on Friday, I'm watching price action and I'm seeing what price action is doing at my double lines here. Okay, I'll just call them my double lines because I still need to trademark and protect myself. I need to trademark and protect my IP. Okay, so my double lines here, okay, they act as a magnet for price action. Okay, my double lines act as a real gravitational pull of price action. So I kind of watch them and I kind of really sit back, especially at the open, and I watch what price is going to do off the open, which is about 7 o'clock Eastern time for UJ, all right? And that'll kick off the Asian session. And it's either the thing is going to make a move during the Asian session or it's not. If it doesn't, it'll make a move, during the New York session, all right? So when New York opens up, it'll make a move then. But if it does make a move, you just got to really be wary of the moves that it makes in the Asian session. So according to what I was watching, I sat in, I sat there, I watched. I was watching Bob Ross paint. And I watch Bob Ross paint 24 hours a day. I mean, growing up with watching him on Georgia Public Television, and just it was just so therapeutic to me. So I got back to watching Bob Ross as an adult about a year and a half ago. Once I saw that he does have a YouTube channel and his estate has created a live stream every weekend. I love it. I just love it. So it's therapeutic. It's good for my background noise. So I'm watching this thing and I'm watching this thing and it's Friday and of course they go live with Mr. Ross and he's painting and I'm listening. I'm soothed out. I'm calm. I'm relaxed. So I'm watching this happen. I'm watching price action happen. So here's the candle. Let me get to the mouse. The candle opened up here. Let's go. Let's take off the auto scroll. Okay, so the candle opened up, right? This is the opening candle right here. Okay. This big green candle open, boom. All right. So as the price is fluctuating and undulating, this is right here. This is a first telltale sign to me. I'm watching this. Once this happens, okay, this close is outside of my opening candle. Okay, so now I'm like ding, 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 ding. Okay, what's formulating? I can see here that I have a nice small baby wick on the top once this happens. This is a very strong signal, okay, that you need to perk up and you need to pay attention. Once bars close below previous bars, especially an open bar. So now you have another bar that closes low, but it doesn't close lower than your tail on the previous day right before the close. So you got 1, 2, 3, 4 candles before the close on Thursday. This bar has an outsized tail, which lets you know that this is basically orders being absorbed. Orders are being absorbed. Now, you would think that once it fights its way down here into this area, all these orders are being absorbed. What orders are being absorbed? I don't have that, level 2 ability on MetaTrader 5. I'm pretty sure I could download a EA for it, but I just don't use it because what I do is I watch and I know, okay, here we go. We got the open. Now, anything that closes below this, I'm going for it. I'm taking it. I'm taking it and I'm going to see how many points I can get out of it. I generally try to go for a threefer. I try to make about 3 times, a 1 to 3 basically. So if I get in at the close of a candle that closes below this candle right here, this wick, that means I know that that price action is all sell price action, right? So what happens is it goes through these undulations. See, look, boom, absorption. This candle closes inside of this wick area, this tail area, I mean, not a wick. A wick is on the top, tail is on the bottom. So this is all price. This is all price. That matters. So this red candle, after this red candle closes below your opening candle, you're sitting there, you're watching like, boom, okay. Now, once this candle closes inside the price action of this tail, which is a prominent tail, you got to watch this tail. Like I said, look immediately to your left. That's where all your information is at, immediate left. You see what happens. Boom, kaboom. You have a kaboom of a green candle. That means what you're saying is there was a lot of orders absorbed in this candle for buy. Now, we don't know if people could be getting stopped out. We don't know if people could be just taking buy orders, sell orders. We don't know until it works itself out. You have to be patient. You can't jump the gun. So you're waiting and you see this candle happen, and then you see this candle happen, then you see these candles. You see wicks on the top, right? So in direct relation to this tail, you have this wick of this candle that shows you it's absorbing orders. Once it comes back up and it makes its way to the double line, it's just consolidating now. Now, these big candles let you know that there's orders being absorbed. Orders are being absorbed. The smaller the candles get, the less order absorption is happening. Now, what happens is this is where the magic is coming in at. You got 1, 2, 3, 4. Okay, this candle makes an incredible new lower low outside of this candle. As long as it's still in your purview, as this is happening, this candle, the previous day's candle, is still in your purview. So you have to give it importance. It has mathematical importance, it has price action importance. It's still in your purview. Once this candle happens, what do you think is happening? There are sell orders being absorbed here. These are sell orders. This is sell orders. This is not buy orders. This is sell orders. People are the market is pulling in sell orders. The market is um, kicking people out, creating jackhammers. That's a jackhammer. This candle right here is a real jackhammer, right? Jacking people of their money. Put a gun to your head. That's what this is. That's what a jackhammer is. A jackhammer is a search and destroy candle. This is a jackhammer right here. This is a search and destroy candle. There's a lot of orders here. It's knocking people out the game. It's knocking people out the positions. People are taking buy orders and they're sucking them up. They're pulling them in, and big players are just, going through, and they see where all the orders are at. They see where all the orders are at. They're using an order matrix. They're using an order book matrix that you and I don't have access to. You do, but it's going to cost you. So this is where patience comes in at. You have to be extremely patient. Okay. Um, and then once you see this happen, let's scroll. Okay. So now this is still in your purview. Now what happens is you start to see, look how small the candles get. The candles' bodies get really small. Now what's happening is, slow price movement. There's a trend starting. See, the trend is not major candles and high volume. The trend is low volume, smaller body candles, but clear directional movement. I'll say it again. A trend is not extremely large candles, structural change candles, because you can't get in on them. Like I said, the most important portion of a candle is the close. So you got to wait until the candle closes. If the candle is a major outsized candle, the big boys don't want you in. You got to sit out and wait until things calm down, until the big boys have absorbed all the little boys' orders, all of the stupid money that's in the market. It just pulls it in, and it just they knock it out. They get you out the game. That's easy liquidity for them. That's easy money for these big guys. It's easy money for the banks, the hedge funds, and all of the different people that trade. this Forex or stocks or whatever it is. So you wait, you have patience, you sit back and you wait and you watch and you see the trend developing. You see the trend developing. This is why I have these lines. This is why I have these dynamic lines, because it illustrates to me with this fan out. There's a fan out that's happening. This is a fan out right here. This is a fan. Once I see this fan happening, I'm waiting for candles to close outside of this. I'm waiting for things like this to happen. I'm waiting for things like this to happen. I'm waiting for candles like this to happen right here. You understand? So this is what I'm waiting for. So what happens is, if you shrink it down, let's shrink it down a little bit. And we see price action closes outside of this previous day here. You see what it does? That lets you know it's still power in that previous day's candle. Look at it. Look at this previous day's candle right here. How many candles actually close outside of that low to the right? Just look how much importance is placed from a previous day's price action. This is what I tell you. Price, the wicks and the tails are real. The close of the candle is the most important part of the candle. There's literally only one candle that closes outside of that candle, and it's this one right here. This candle right here closes outside of it, but it doesn't close outside of it prominently. It actually absorbs orders, and then it tails up, and then the body is small. And then guess what? Look at what the price action does. It doesn't close outside of it really until this candle right here. This is a good entry candle. If you're sitting here and you're watching it and you see that price has not all the way gone berserk and gone the other way, and its price starts closing outside of previous important price levels, you could be aggressive and get on this candle on the sell side and wait until this happens. Look how small the candles get. Look how small they get. You could enter on this on the close of this candle. You could enter on the close of this candle. You can enter on the close of this candle. You could enter on the close of this candle, right? But you have to be aware that trading UJ, you're going to have a lot of what I call price breaches. And I'm basing the breach off of my moving averages. Your moving average is previous price being multiplied and, coagulated in this long mathematical equation, and price reacts. Price reacts to previous price. Okay? Past performance predicts future performance, right? So if your previous price levels are being illustrated by moving averages and current price is reacting off previous price levels through your moving averages, this is where you can learn to take your entries at. Okay? These outsized candles, that's a good candle to get in. But look at your fan out, you know that there is a price retracement coming. And look what it did. Price retraced back up to the open of this candle right here. This same candle that just closed outside of all the rest of these candles before it. All the rest of these candles before it. Everything out of your purview and everything. Look, it closed outside of everything from yesterday, from the day before. You know that this is a structural change candle. So be aware when you're looking left and you're seeing price close outside of previous price structure. You know that there's a retracement coming. So you can wait, you can be aggressive, or you can wait because you know that there's a retracement coming now. Okay, and the retracement happens. Let's put our crosshair back up here. Okay, so you see price retrace all the way up to the open of that candle. What happens when price retraces to the open of that candle? Look to your right, and you see here, price gets all the way to the open of that candle, right? And then it pretty much pings out, okay? Absorbed. Boom. You got to move down, all right? Now, this candle doesn't close outside, but there's a retracement here, so you know that there's some consolidation going on. So This is where I decided to take a trade at on Friday and get myself in a potential down move. Okay, so I watched all of this happen, and then once it got to this right here, I knew, okay, consolidation. That's a lot of price. That's a lot of sell order absorption here. That's a lot. That's a great deal of sell orders that have been absorbed. Okay, all right, that have been entered into the market. So now you have price consolidation right here. Okay, once you see price start doing this, this is what you call a bear flag. This is a bear flag. Okay, when price does this and it kind of moves up and you have this slightly these higher closing lows and candles are not going, this is a bear flag. Okay, so you have your previous initial bear move, right? You have your previous initial bear move, and then you have your bear flag that happens here. Okay, once the bear flag happens, now you really wait. Okay, boom. I don't like taking moves. I don't like entering if price is happening inside of other price. All of this price is happening inside of previous price, this right here. All of this happens inside of this. This is wash. This is backwash right here. A lot of people get caught up in this backwash with all of these choppy moves and fake outs and all. It's not a fake out. It's just consolidation. It's just what it's doing. You have to understand what it's doing. So this candle happens here after the consolidation, and then you have this, and then you have this breakout candle right here. This is where the information came out on Friday. Okay. This is where some U.S. economic data came out on Friday. So once this candle closed and I'm watching it, and I said to myself, if this candle right here closes below all of this, I'm going to enter. I know that there's going to be a retracement, but I'm not worrying about it because I know that once that candle closes, whether it has this long crazy wick on it. Now, I'm going to be honest, I wouldn't have entered if it closed like a shaved bottom. If the body was all the way down here, I wouldn't have got in that trade because I know for a clear fact that there's going to be a major green candle coming after a major red candle like that. That's a big boy candle. That's a bank candle, hedge fund candle. You got to know the difference between hedge fund candles, bank candles, and retail candles. Those are big boy candles, okay? So once the information came out and once Trading Economics Calendar put out the information and the BLS released the information and everybody in the world knew, this price started to get volatile. So I said, okay, I saw how far it went down, but I know it wasn't like really humongous economic news that came out. It wasn't humongous. It wasn't like a clear miss or a clear beat. So it was like right in line. So, okay, it was mixed. Okay, so once that candle closed and it closed below all of that, I said, let me go ahead and get in the trade, and I'm going to sit in the trade all weekend. I knew at that point I'm going to sit in the trade all weekend, and then that candle happened at like 8 o'clock in the morning, but I knew 8:30, something like that in the morning. I knew I was going to sit in the trade all weekend, potentially for a few more days, because what I have done was I went to my higher time frames. As that's happening, I was looking at my higher time frame. I was looking at my daily and I saw how my red candle was forming. And I said, okay, we're going to have a red day. And I was looking for confirmation in all of my lower time frames. So I looked at my 4, I knew that wasn't going to turn. I knew that wasn't going to turn over as fast. I looked at my hour, I knew that wasn't going to turn over as fast. But my 30, my 15, and my 5 were all turned over, okay, into a sell position. So once I saw that, that's when I decided at the close of this trade, I was going to take, at the close of this candle, let's go back to the 5. At the close of that red candle, I was going to take that trade. So once that candle closed, I got in the trade. Of course, it's not literally at the bottom of the candle where the close is at because of the spread. I think the spread was like at like 2 at that point because of the volatility. So I got in and I said, okay, and it moved down, it moved down, it moved down here, and it look. This is why I tell you the wicks and the tails are so important because it's literal price action. This is where orders were at. This is where orders were being absorbed at. Look at what the price action did. It moved inside of it. It moved inside of it. Okay. and then it bounced up. Orders. This is all orders. You don't need the matrix. If you know how to read your charts, you don't need the matrix. This is all orders right here. Okay? This is all orders. So it moved up, it bounced up, but you got lower closing low, lower closing high. You got another lower closing high. You got another lower closing high. So I'm in here and I'm like, I don't even care. I closed the computer. It's Friday. I went and did something else. And then I came back and this is where it was at. Let me see, my bad. Yeah, this is what it had done. So from Friday for the rest of the day, in relation to my double lines, look at what price is doing. Lower closing highs, clear downtrend, clear downtrend. Even though it's choppy and it's ugly, I'm pretty much getting in on a major 1, 2, 3, 4, or 5 day downtrend. Okay. In the totality of the price movement, if we look at my daily, look at the daily chart, you can see that was Friday. It was red. So what I'm looking at, I'm saying, okay, how many days do I think I can stay in that trade? I know that there's no major economic information coming up Monday. There's some coming on the 25th. So do I still want to be in the trade then? You know, it's up to me. We can go and we can check it out real quick. Let's go to the economic calendar. So I know on Monday, there's no real information coming out. You got Dallas Fed, you got 3-month bill, you got 6-month bill, you got 2-year note auction. You got the Chicago Fed later on that night, which is nothing. It's not going to move the market. Then you have Tuesday at 8:30 in the morning. You got PPI, you got retail sales. The United States and traders around the world are hungry for United States data sets to come out. See, look at all this data that's coming out on Tuesday. So, do I want to stay in my position? Hell no, I don't. I actually want to, because the only way that the thing is going to continue in that downtrend without uh, going too far outside and potentially turning around is if these numbers are misses. You understand? They forecast 0.5% PPI month over month. They forecast, let me see, is that half? Yeah, they forecast 0.5% of PPI month over month on Tuesday, November 25th. Retail sales month over month, they forecasting 0.3%. So if these numbers come in as a beat, that price action, if all these numbers come in good, that price action is going to go berserk. Oh, hold on a second. I don't want to do that. I just want to go to my chart. Oh, this price action is going to go berserk. And it's already in a general daily uptrend. So I have a decision to make by Tuesday morning. I have a major decision to make because price could be just checking down into this first moving average, right? Like all price is doing, it's been bouncing off these moving averages, going in an uptrend, right? So I could say, okay, I'll stay in the trade for Monday, try to pull out a few $100, right? And what I'll do is I'll stay in the trade, try to pull out a few $100, keep monitoring, keep monitoring, keep monitoring. And what I'm expecting, let's pull up my 15. What I'm expecting is a breach up. So what I'm looking at is my open. I'm looking at the open from Friday, and I'm saying to myself, if the information comes out and price action breaches higher and closes higher, if there's a candle that closes not significantly but moderately significantly above the open of my Friday candle, then I know that it's going it's immediately going in back into its uptrend. It's going to continue in its uptrend. Okay? Which I do expect by Tuesday that it's going to continue because it's not in a general downtrend. You might get a couple of red down candles. Now, if something happens and the information comes out as a miss, yeah, shit. I know a lot of people don't tell you not to trade, during information releases, but I mean, hell, I would do it. Once that candle closes, that information release candle closes, you know, you get in. Once that candle closes, you get in because you're going to see a breach down here to maybe the red EMA. It could go down here. So that I actually have my take profit. Like I said, I actually have my take profit below the 151 area, and it's at 156 right now. So I'm looking for some movement down, but not a change of trend. Okay, so the Japanese would have to put out a humongous um, data set for the trend to change, to go against the United States, and for the yen to start um, strengthening. And then if the Fed cuts, this thing is just going to kablat. It's just going to go boom. It's going to keep going to the moon. So you're getting it raw and you're getting it real. You're getting it here, right here, live. For the for the recap of the Friday session. So yeah, that is exactly what I'm expecting. I'm looking for some more push down, and then once it gets into the area of this first moving average, I'm pretty much expecting for a price to bounce around and get a little funky, but I'll take my profit and take a few $100s off of or whatever. I'll add to the position as it moves down. It's a daily candle, but I'm trading on my shorter time frame, so you know I'll get in, and you know I'm really kind of like trading my 1 hour. I'm waiting for my 1 hour to fully turn over, and I'm kind of waiting to see if my 4 hour can turn over. So I might get one, two, maybe potentially a few red candles next week. So, it's going to be very interesting going into December and seeing what the Fed does, and, just watching price action for my UJ. I love trading money pairs. I love it. It's cash, cash. You make $1,000 today, you could put in $1,000 withdrawal. With US brokerages, you'll have your money in 24 hours. It always shows right up in my bank account 24 hours later. I've never waited you know, I've never waited. I've never waited. When I used American brokerages, I never waited. When I used offshore brokerages, I've never waited. But I've just been lucky. You know what I'm saying? As far as the offshore goes. But the Americans, the United States based brokerages that's protected and, by the full faith and credit of the United States government. um, yeah, I never waited for my money, man. So, this is a cash game. This is the frontier. This is what's going on. Everybody's losing their fucking jobs everywhere. So be careful and learn something. Learn something highly technical. Learn something that is computer based. I don't care what it is, as long as it's technical based, and you're going into what the future is. And get out of psychology and get out of all this stuff. You saw what Trump said, what the Trump administration said this week about these professions that are not considered professions of high importance any longer. Like, they're downgrading this stuff right in our face, bro. They're downgrading this stuff, and they're not playing any games. They are they want this country and they want the economics of this world to just like be like, man, if you playing, you're just gonna be poor, or you'll be taking a UBI, you'll be taking a universal basic income, and you'll be getting your $3,000 check every month, and you'll be living like that. They're going to mix. They're going to mix capitalism, socialism, and communism all into one big pot and make a hot soup out of it. And whatever you are, whatever ingredient you are, everybody wants the meat, all right, out of the soup. You either gonna be the meat, you're gonna be the vegetables, or you're gonna be the broth. And the broth gets thrown out. Okay? So nobody drinks the broth. Okay? Only the people who know drink the broth. And those are the meat eaters. Okay? They're drinking the broth. So they'll be the ones redirecting their wealth into you brothies who are out here playing. You either out here learning something that's going to go into the technological frontier, into the new age, into space, into all of this other stuff, AI and all this other high technical stuff going on, or you're going to just be, because your little basic job is not going to cut it. $3,000, $4,000, $5,000 a month ain't gonna cut it. You got to be putting in work to try to make 10 grand a month or better, and that is it. Okay, so what we're gonna do is we're gonna come back and we're gonna revisit um, Monday. I'll make a video recapping Mondays, well, basically Sunday all the way through the trading day on Monday. And then I'll post a video before the Asian session kind of gets into its full swing. And, you know, that'll be what it is. And thank you guys for sitting here and watching and soaking up whatever you soaked up. Um, and yeah, that's about it. And thank you. We'll see you. Like, subscribe, and please leave comments. Please ask questions. I'm I'm not going to sugarcoat anything. I'm just going to just tell you exactly what it is, and that's what it is. Okay, later on, guys.